Hey traders, apologies for missing last week, but I've got a jam-packed weekend review ready for you today. In this week's video, I want to discuss two different topics. The first being the two parts that make up a successful trade, and secondly, how to control and really handle your emotions while you're in a trade. So sit back, relax, and we'll get the intro and the disclaimer out the way, and then we'll hop right into this week's weekend review video. Hey traders, Akil Stokes here, head currency trader with TradeEmpowered.com, and thank you once again for joining me for the weekend review video. I am now up to 4,700 plus subscribers that tune in each and every week to view this video. And if you are one of them, I just want to say thank you very much. Your support is very appreciated. If this is your first time joining me and you like what you see, well, when you're done with this video, it should be somewhere underneath your screen. Hit that subscribe button and join me. Not just so I can get the numbers up, which I do enjoy, I'm not gonna lie to you, but also so you're informed whenever I put out a new video. This week was a perfect example. I put out a random video Tuesday, I believe, with a trade opportunity, breaking down a trade opportunity on the dollar CAD. And well, if you missed that, you might have missed 150 plus pips in profit. So you want to make sure you're tuned in each and every week and up to date when these videos come out. Now, today, I've got two topics, as I mentioned earlier. The first is going to be the two reasons that you should look for a trade. And I dedicated a week worth of training to this last November, I believe it was. I did a week-long trading presentation called Vision Week, where the whole point of that presentation was to show traders and help them set up a daily routine of how to attack the markets. You know, you wake up here, you do this, then you do that, really setting up your trade point after point after point. And well, I'm still running into a lot of traders on a regular basis that are looking for trading opportunities, but not necessarily the best trading opportunity. I think Jason Stapleton said it best during War Room this week in the syndicate, where he said, hey, if I've got to sit on my hands, if there's no good trading opportunities out there, I'm going to sit on my hands. I'll go play golf. I'll go watch a movie. You gotta eliminate that need to trade. You shouldn't be, you're in this industry to make profit. You're not in this industry to get the rush of being in a trade at every single moment. If there's nothing there, there's nothing there. But one thing I noticed is that traders are only completing half the process. And the process that we teach here at Trade Empowered is called I.P.D.E. And that stands for identify, predict, decide, and execute. That's the process we go through before ever getting involved in any trade. We want to identify what the market is doing. We want to predict where the market is likely to go next, also how the market is likely to get there. We then want to decide how we're going to enter the trade, and then finally we want to execute the order. Now, again, the problem is when you're only doing half the battle. We can kind of split that up into two parts. We can have the I and P, the identify and predict. And that's the part that's going to tell us whether this is a trading opportunity we should be in or not. Then we have decide and execute. That's more of the specific ROE, rules of engagement, for how you can actually get into the trade. And again, a common mistake that I see is that many traders forget the first two parts. They only look for the decide and execute. They only look for the entry reason, meaning a good example is a double top. Double top, ABCD patterns, phenomenal trading strategies. Very simple, very easy to understand. Many traders that are new to technical analysis come in trading those simple patterns. However, and take this from personal experience, if you simply try to go to the market and trade every ABCD pattern, every double top or double bottom, you're going to go broke pretty quick. Again, trust me, I've been through it. Take my word for it. Let my suffering take place for your future suffering. So you don't have to do it. But rather, what you want to do is you want to identify a place in the market first where you believe the market is going to reverse at. Only after your pre-market analysis tells you that, hey, this is a potential reversal zone. This is where the market should see some relief at, or should see some resistance at, then and only then you go to those entry techniques, the DE part, decide to execute. So, a great example using our if-then thought process is, if price action reaches our potential reversal zone, then I look for double bottom for entry. Or if price action reaches the next level of support, then I look for ABCD pattern completion to give me confirmation of that level. So I did want to address that because I've been getting a lot of emails. I've been reading a lot of stuff on TradingView about that, just some of the struggles traders are having, and hopefully this connects with some of you out there as well. Now, this actually gives me a great example. We had a few trades this week. I'm going to bring two over to my computer. It's going to be the dollar CAD and the euro yen, and it gives a great example of really being patient in the trade and waiting for the entire trade to set up. And let me, I got to find my chart, so give me 1 second. Thanks to the magic of editing, it won't take that long at all, but give me 1 second to load up my charts, and then I'll get them over to you guys. All right, gang, two potential trading setups here that we had this week, one on dollar CAD, one on euro yen. And we looked at this in the live room. The first one on euro yen, here's what we were looking at. We did our top-down analysis. We were looking at a level of structure right here. And I was actually looking for a buying opportunity. We had a back pattern completion on the radar. It actually still is on the radar technically, but I was looking for a buying opportunity, I believe, right down in this level right here. We were watching on the 15-minute chart. And it was one of those things where we identified what the market was doing. I made a prediction on what I thought the market was going to do next. Now I had to wait. I had to decide how I want to enter and essentially wait for one of my entry rules to be triggered. And I remember during our live room session talking to the traders, said, "Ooh, I like this level. I think we're going to see a bounce. I want to get involved, but I can't." And they're like, "Well, Akil, why can't you? If you want to get involved in there, why don't you just buy the trade up?" And say, "I wish I could, but I preach to you guys that we have a trading plan. We spend a lot of time on creating that. We have rules of engagement. We have those rules for a reason. And if I break my rules, you guys are going to let me hear it." And although I wanted to get involved, I said, "Hey, this is a trade I'll probably have to pass on." And well, you can see getting long here would have been the bad idea, or would have been the wrong idea. And well, following my rules saved me from a significant loss right here. So again, an example of how following your rules and although the first half of that trading analysis came true, the IP part, we did our identification, our prediction. We didn't get the entry reason that we needed, and because we followed our rules, because we passed on that trade, we were able to, keep ourselves out of a loss. We had the same thing on dollar CAD, similar situation here. I'm not going to break down the whole trade. You can go ahead and watch the video I put out earlier on this, but similar situation. We were looking for price action to retest down at a structure level, and we used our if-then thought process. We identified what price action was doing. We were in a heavy bullish trend. We were at some weekly resistance on the higher time frames, but we thought that market would come back down into our minor structure level here, and we thought we'd see some relief, a potential bounce. And we then looked at different ways to attack this trade. We said, hey, if you're an advanced pattern, and if you can stomach a large stop loss at this level, you can trade it as a bat pattern, put a limit order down there and buy it up. Or, if that doesn't work, let's find an alternate way to enter, and we can wait for perhaps a double bottom or something of that sort. And, if we go down to the 60-minute chart, again, identify, predict. Price action came right down to our level. We use our if-then thought process. If price action comes down to our structure level, then I wait for double bottom. Double bottom happens. If I get double bottom, then I buy it up next bar market. And 150 pips later, this trade is in the black, in the green. You've made a pretty good profit out of it. So again, you've got to go through the entire process, not just half of it. You just can't look for the double bottom. A double bottom is meaningless if it's not at a level that you think price action is going to reverse at. I mean, just think about it. What's the point? Are you trading a double bottom just to trade a double bottom? Just so you say you could? You only want to execute trades at potential reversal zones. If not, you're just wasting time and wasting your money. So I wanted to preach heavy on that topic this week. And now while we're on the dollar cash, speaking of which, this was a very good trade. I've got a lot of positive feedback. I posted this on TradingView as well. I got a lot of positive feedback for this. I'm just saying, hey, Akil, thank you for pointing this out to me. Thank you for made 150 pips on it, whatnot. No need to thank me, guys. Again, I take no credit for your wins, and I certainly take no credit for your losses. My main goal is to make sure you guys are learning and knowing how to trade the right way. So pat yourself on the back for executing the trade and hopefully following your rules. But I do appreciate the gratitude, I guess. But I handled this trade a little differently. I wrote this in my blog on Wednesday. Because I didn't take this as a bat pattern, I didn't have set targets. And you'll see me do that a lot with structure-based trades. It's not a technique that I teach. But it's something we talk about in my 12-week transformation course, is active management, trade management. And I actually recorded, I believe I have a recording of a little conversation we had about that in the live room. So I'll go ahead and show you that, and then I'll be back in a few minutes. We've broken and closed above that level, so it's good for the trade. Looks like if you're taking this on the bat pattern, you should have hit target ones. There we go. I'm actually going to manage this very closely. I'm going to see how much I can get out of this rally, but I'm going to get stops up to break even. I'm going to see how much I can get out of this thing. But we're at that target one level for the bat pattern for you guys that entered strictly on the bat. Here's the structure level I have in my radar. This is the level I'm concerned about. So I'm going to watch price action. By price action, I'm going to watch the individual candle. Once we start, and this is kind of, I don't teach this. This is kind of advanced a little bit. Once we stop getting bullish, once we stop getting candles that show us bullish signals, or I should say, once we start getting candles that show us bearish signals or a chance for a potential bearish rotation, I'm going to exit manually. My overall expectation is that we can cross. We have some weekly structure up here, but we can cross this entire line, guys. Because we're in a bearish market, we can come all the way up here. Now, I'm not going to get greedy and just say, hey, I'm putting targets up here, because we do have a lot of roadblocks. We got one right here. We're going to have a roadblock right here, another roadblock right here. But I'm going to wait for the market to give me a sign that we're not going to just keep rallying up. I'm going to wait for a sign that says, "Hey, profit taking is starting to happen with the bulls. The bears are starting to gain some momentum, and then I'll look to get out." But I'm not going to take myself right out here. We can easily come to structure and really keep rallying all the way up. So it's a different way of managing a trade. It's, again, something that me and Jason don't talk about a lot in the syndicate, mainly because it will confuse people more than help them. Our theory on teaching is to make things as simple as possible so that you get it. And then once you get it and you get experience doing it, then you can start learning some of the subtle nuances of trading and kind of rotate your rules around there. But what happens if we teach this in the beginning to everyone? Everyone starts trying to do it on every single trade, just like the aggressive C, and we run into problems. So I don't know if that makes sense or not, but to put it simple, we're in a bullish market. I'm in a bullish position. So there's an opportunity that this market could run a lot higher. And if it does, I want to be a part of it. 26 flat again. Looking at Canada, we're right here. We're gonna keep round. We're gonna hold this thing. We're gonna hold this thing and see how we react at each structure point. We got to this structure point right here, guys, and this is the tough part of trading. This is where you got. I mean, it's really hard to put emotions aside. I'm not gonna lie to you. Really hard to put emotions aside, but when you have a good knowledge of structure, at least you know you're still gonna be emotional. You're still gonna get scared, nervous, greedy, all those fun things. But at least you know where you should get nervous at. And it sounds dumb, maybe, but It really does make a difference. If I know, here's the thing. If I don't know how to read structure, every time I see a pullback, I'm getting scared, right? I'm saying, oh, no, the market's going to give it all back here. You're still going to get scared and nervous, but if you know how to read structure, at least you know where to get scared and nervous at. You guys follow me on that? It sounded good in my head. I don't know if it came out well, but at least we know if you're managing it, you know that, hey, we've got structure here, we've got structure here. So the market is supposed to run into trouble, right? The market is supposed to put in some resistance here. So when you see this type of pullback, you're not too quick to be like, oh, close orders, right? You're not too quick to do that because you know the potential is there, and it still doesn't feel good. Nothing's going to help that. Your heart's going to be going a million miles per hour. You're going to be sitting there like, I don't want to go from 177 down to 150. But at least knowing that it's not a surprise, it helps a little bit. At least I find that it helps a little bit. So whenever I'm managing stuff like this, I like to draw out my levels. Like, this is going to be a big level. I will probably end up taking targets somewhere in here. I don't think we're going to shoot right past here. We should see some profit taking in this level. I'm going to wait and see, but I don't see us rallying past here without a big retracement. So on one of my accounts, I'll just close out for, hopefully 150 in here. I may have to deal with a little 20 pip pullback, but that's okay. The second account, I can take out half a position and let the other one trail and go for the big targets. Shoot for the home run with that. But we'll see. It's a little lesson on trade management, just how to handle the emotions of it. It's not easy, guys. And if it helps, I'm feeling the same thing. I hate watching trades, but if I'm going to manage it aggressively, I have to. And my heart's beating. There's something deep inside of me hoping we just rally straight up, but I know that's not going to happen. So, hey, that's trading for you. It's not for the weak of mind. Only the strong survive in this industry. Now, Pound Aussie 60 minutes. Someone said something about. All right. So I hope you guys enjoyed that. And again, the key to that active management is it's not a trick. It's simple. Learn the basics of structure. Learn the basics of how to read a price chart. Learn what candlesticks mean. Not necessarily the different Japanese candlestick formations, but simple stuff like, what does a long wick to the high side mean? What does this type of close mean? What does this type of open mean? Because when you know that stuff, it gives you hints and clues of where the market is likely to reverse at. And, if you can put yourself one step ahead of the competition, all it takes is that one little edge that can do wonders for your trading. It honestly doesn't take that much, but it starts with taking the time, being disciplined, and, really deciding that you want to learn the basics. You just don't want to skip to, I just want to trade Gartleys or bats. I just want to do the fancy stuff. Take this from a person who's experienced that failing himself, and also have worked with hundreds and hundreds of traders around the world. The ones that I see that go on to be successful are the ones that pay attention to detail, the ones that take their time and really learn the basics first before wanting to do anything in advance. The ones that fail are the ones that are just worried about the money, just worried about the fancy stuff that makes them look good on trading forums, and they usually go on to continue to struggle. And again, I was once that person, so I know exactly how it is. So anyway, thank you for joining me once again for a weekend review video. Again, if you like what you see, guys, do me a favor, hit that like button. Certainly subscribe. As I mentioned earlier, you don't want to miss the videos that I put out. And of course, share this with a friend, a fellow trader, anyone who you think needs to get to that next level in their trading career. And of course, if you like videos like this, if you like videos like the dollar CAD video I sent over, or I posted to YouTube earlier in the week, you may want to consider joining our syndicate program. It's a program that Jason and I run. Jason does War Room, which is a morning meeting every single day where he goes over, talks a lot about trading psychology and as well, but he goes over his best trading ideas for the day, along with the thought process and rationale behind them. And then a few times a week, I also post videos on the syndicate website, mainly looking at longer term time frame trades heading into the London session, and of course shooting trade ideas over to you on the trade floor. It's not a signal service, so if you're looking for something just to sign up for and follow trades and take everything we take, then don't join. We don't want you in there. But for someone who wants to just kind of see how a professional handles himself day in and day out of the markets, it's a very good entry level place to get involved. Cheap too, relative to the other programs we run. So I'm out of here. I will see you guys next week. Syndicate members, be on the lookout for an email tomorrow. It's Non-Farms Friday, so that means that you get to join me in the live trading room. I'll shoot you the link and the password around 7 o'clock, 7:30 New York time. For the rest of you guys, I will see you next week right here on YouTube for the weekend review. Until then, plan your trade, trade your plan. Have a great weekend.